Hi, everybody. Welcome to EXP Family Tree. This is Becky Colburn. I'm here with my partner in crime, Cari, Briner. We're so excited to have you. And Cari announced yesterday, we're like over 8,000 in EXP Family Tree. Is that right?
Yeah.
Incredible job, Cari, for blowing it up, because there were how many when you started working in
Well,
EXP?
I think we had like maybe under 1,000, and it's just blown up this year, you guys, because you keep inviting your friends. So thank you for that.
Yeah, and keep doing it. And they show up for a guest like we have today. So Tommy Thornburgh, we're so glad to have you here. I was just telling everyone I Facebook and Google stalked Tommy before I came on, and man, he is all over the internet. He's got all these podcasts. He's been a guest on podcasts. My favorite one was Military Millionaire. So if you haven't heard that one, go listen to it. It was fantastic. But in the interim, I'm going to introduce you to Tommy's bio. It's super impressive. Tommy Thornburgh, president of Prime Corporate Services, gives all the credit to his team for truly making a difference over the past 10 years that he's been at Prime. Tommy's the brain and face behind all the company's webinars, presentations, and events, and oversees 50 corporate advisors. Under his leadership, PCS has helped over 100,000 entrepreneurs structure their business properly. Oh my gosh, we're so excited. You've had a lot of time to fail forward, Tommy. We're glad you're on this call, right? Tommy joined the team as one of 3 corporate advisors. Since then, he has grown his team to include 50 people that are helping more than 400 new entrepreneurs a day. In addition to getting up on stage and presenting, Tommy takes a lot of pride in Prime's ability to grow and scale over the last several years. He started his self-employed career knocking doors and selling pest control. Wow. And learned early on what it's like to pay way too much money in taxes. Raise your hand if you feel it. Yes, I do. Tommy worked in sales at ClearLink before taking on his role at PCS. Tommy's brought on many friends and family to the team and is proud of fostering the close family culture that exists at Prime today. In his free time, he loves spending time with his wife and 1.5-year-old daughter, and appreciates any chance he can get to play a round of golf. Wow, Tommy, you're busy. How do you find time for golf?
I don't. It's an old hobby.
Yeah, but until we start adulting, right? And then it's not so much anymore. Well, we're super excited to have you here today, and I've talked a whole lot, but here's what I want to say to tee this up. It's tax season, right? And all of us as entrepreneurs who are 1099ers, right? We are getting ready to get our 1099s, and we are heading off to the tax man to file all of our taxes. And whether you do it annually, quarterly, or bi-yearly, it's always a little bit nerve-wracking to go do this. And you're like, do I have enough saved? Do I have enough put aside? And we're super excited to hear from you today, because we know that you're going to help us keep more of our own money before we file our taxes. We want to hear what you have to say to us. So Tommy, please take the floor. We'll have time for questions later. Put your questions in the chat box. We're going to carve out a lot of time for you to ask him some high value questions. I know you're going to want to hear everything he has to say. So Tommy, thank you so much for being with us.
I love it. Thank you so much, Becky, Cari. Thanks for putting it together. And thank you everyone for being here. I am excited about this. We started Prime Corporate Services with 3 of us 10 years ago. And we just said startup entrepreneurs, 1099 contractors, there's a niche in the market to help them with taxes and protecting themselves. And here we are 10 years later, we've 100,000 businesses we've structured, and over 200 employees now. I cannot believe it. It's been crazy. So a little bit more context as well as to why I'm excited about this group. My mom was a real estate agent for 30 years, and my dad owned a real estate brokerage company, sold it, now living in Nicaragua, looking kind of like you, Darren, over there on the yacht. Looks good. So real estate is something that was around me my whole entire life. My parents split when I was really young, and I joke that the only thing they ever agreed about is that their son should be self-employed. So they did something right, I guess, as far as their wishes were concerned. But I know for agents and for investors, how big of a headache tax time can be. It's not the most exciting part of your journey, your business. And I'm sure a lot of you outright dread filing your taxes and preparing your taxes. So those of you that don't, we're in Salt Lake City, Utah. You're more than welcome to come join us. But I want to share my screen here. I've got a couple slides to keep me on track. I'm going to kind of talk about an overview of how your business is structured, what to be aware of from a tax standpoint to bring to your tax preparer and your tax advisor. And then I do want to leave some time for questions at the end of this thing as well. So Cari and Becky, if there's anything that you think of that you want to interject and add, please cut me off because I'll keep rambling if not.
They're here to hear from you, Tommy. Anything that I could add with on the about taxes and filing and finance would be incorrect.
Fair enough. Fair enough. Sounds good. So going back to a little bit of my background as well. So when I was 18 years old, I'm in Salt Lake. I drove to North Carolina and knocked door to door selling pest control. I only did it one summer. I'm grateful that I only did it one summer, but I learned a lot in 3 months. In 3 months, I made about $40,000 at 18 years old. And I felt like I was like the smartest in the whole world, right? I came home and told Mom, don't tell me anything anymore, Mom. I've got it all figured out. I'm rich. I have $40,000. Uncle Sam wanted 10,000 of that back, and it was gone by the time that was asked for. So I learned a lot very quickly on how important tax strategy was. And ever since, I've really just grown upon that for how to keep more money in your corner. So that's kind of been our tagline over the last 10 years. It's not what you make, it's what you keep. How to protect yourself, how to plan, how to continue to keep more money in your corner from a tax standpoint. So today's key takeaways. Number one, let's talk about the different types of business entities. Everyone that is watching this should have an LLC at the very least. A lot of you probably have S corporations or LLCs that are taxed as S corporations. I really want to break down what you have and why. There is still time for those of you that are only LLCs that will benefit from an S corp election to make that change before you file your taxes for 2022. So I'll talk a little bit about that. Number two, what in the world is a tax deduction? How does it work? And what do you qualify for? And what can you deduct from a tax standpoint? The hardest thing about filing taxes is tracking your expenses. So I'll also give you some ideas of how you can track your expenses throughout the year. Number three, asset protection and generational wealth. Super terrible asset protection, right? Not fun at all, but very important. A lot of you are probably already active investors on top of agents. And those of you that aren't plan on being investors, I'm sure. So how to set yourself up for multiple streams of income long-term. It's not about where you are right now. It's where you're going to be in 1 year, 3 year, 5 year, 10 year. And I'll talk a little bit about how you can structure your business so you don't have to continue to redo it long-term. And then last but not least, personal credit versus business credit. One of the most important part of my bio, my daughter actually turns 2 years old on Thursday, so it's a little bit outdated. I'll let the team know. I am very passionate about saving money on taxes, but I am also very passionate about my daughter having an 800 credit score by the time that she's 5 years old. I will have $1 million in an IRA account by paying her an annual salary that I write off by the time she's 25 years old. I love the aspect of how generational this can be. for your kids, for your grandkids, and for your own business. So I'll try and tie all that together within these 4 components before the end of the call as well. Sound good?
That's awesome.
Let's
Love
do it.
that.
But before we do, wah, 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 wah. I hype myself up just to come to this legal disclaimer. You see how it is. 2 things about the legal disclaimer. I won't read it to you. If anyone wants to read it, let me know. You're more than welcome. 2 things. Number 1, everyone's situation is different. Everyone made a different amount of money. Some of you are married, some of you are single, kids, grandkids. Everyone's tax situation is different. I'm going to give you the 30,000-foot view here, and hopefully we can answer a lot of questions that others are going to have anyways. But everyone's situation is different, so keep that in mind. We will give you an opportunity to speak with one of our advisors one-on-one to really get into the weeds as well of your specific situation. But if I can bring you value today and I can give you a baseline of what questions to ask, naturally that's going to kind of help form what you need to have in place. Second component, I am not a CPA and I am not an attorney. I am an entrepreneur, I'm an investor, and I'm also not thrilled about tax time every single year. So I could bring my attorneys on here, and we will. Cari and I have talked about that, where we'll have a time where we bring the attorneys on to go into contract stuff or whatever it is that you ultimately want to learn about. I do have a full team of accountants and CPAs. I've got about 50 on staff right now, and then we have a full team of attorneys. They do all the work. I like doing these, so you're stuck with me, but I like to talk to you as an investor and as an entrepreneur and what you can do as opposed to what you can't do. If you weren't done reading it, let me know. I'm happy to go back, but otherwise, let's just move on. Okay, business structure. So I am a firm believer everyone in the US should be self-employed to some extent, whether it's a side hustle, side business, or full-time self-employment. The tax code is over 70,000 pages, and the majority of them benefit entrepreneurs and investors. Okay. As soon as my daughter can say lemonade, we're setting up an LLC for a lemonade stand, and we're doing the whole profit and loss thing, because there are deductions that you can utilize, even if it is something that is a side hustle like a lemonade stand, right? Within the tax code, and this is important for everyone to understand, it's very clear that you are self-employed. You are a 1099 contractor, and for all the 8,000 people, there's probably some of you that haven't done your first deal yet, or have only done a couple deals. Within the tax code, all it says is that you have to show the intent to be self-employed. There's no tax code that says you have to be good at business, or there wouldn't be any business owners. No one's good at business. We're all giving our best intention to generate income. Because there's so many different levels to that, as long as you're showing that you are a legitimate business, you're opening up the tax code to utilize additional deductions. I don't recommend, for that reason alone, any informal business structures. Those of you that are still operating under your name and your social security number, you're a sole proprietorship. Those of you that are doing this with a spouse or a business partner, you're considered a general partnership. The problem with anything informal is there's no asset protection and there's limited tax benefits. So as soon as you have the intention to generate income, which all of you do, set up an LLC. LLCs are going to keep things simple. They're going to keep things easy. They're going to give you protection, but they're going to work as flow-through entities to still benefit you tax-wise, profit or loss, good or bad, right? And that's our goal. That's what we want to help you understand how to do. Now, for those of you that are already LLCs, I'm happy that we're talking right now because we still have about a month and a half for you to get approval on a very, very important topic. So those of you that generated income in 2022, please listen very carefully because this could save you thousands of dollars in taxes. When you are an LLC, you choose the way that you are tax elected. So you can be a single member, a disregarded entity, multi-member, S Corp, C Corp. Once you make $50,000 to $100,000 or more, it oftentimes is advantageous for you as the business owner to have your LLC taxed as an S Corp. Okay, the reason for that is it allows you to justify paying yourself a salary or a distribution, but it also allows you to avoid half of your self-employment tax, which is Medicare and Social Security. So that alone can save you a little bit over 7%. You make $100,000 and change that tax election right now for last year, that's a $7,000 savings back in your pocket. Okay, very easy. If I talked to you in December, I'd talk more strategy of what to do before the end of the year, but it's water under the bridge. Let's deal with what we have right now and let's make sure we fix it moving forward. Right? So LLCs, those of you that are generating 50 to 100 or more, LLC as a sub S is likely going to benefit your situation. Sound good? There are benefits to C corporations from an asset protection standpoint. I personally don't love them unless you're moving money the right way and have bookkeepers and have accountants, because you can fall into some double taxation, business tax, personal tax. My goal is I want to help you understand how to keep things simple and keep things easy, because I know that this legal and financial is not the most exciting topic and probably not where your focus is best spent, but it is very important to the bottom line of your overall business. So hopefully that brings some clarity. Set up an LLC, make sure that you're taxed as an S Corp for those of you that are generating income, which, by the way that you do that, write this down. If you're like, I need to make that change, or I need to talk to my accountant or my CPA, all you need to do is submit a 2553 form to the IRS. Helen Ann, thank you for that. I appreciate you. 2553 form, I just threw it in the chat. And you can change the tax election. That's what I love about LLCs, is you can change the way that they're taxed once a year and still make sure that you're benefiting regardless of what your annual income looks like. Okay. All right, moving on to some of these tax deductions. Most of you are going to be considered self-employed, home-based entrepreneurs. Agent, broker, you can fill in all sorts of different titles with that. But I want all of you to go to your accountants and your CPAs and your teams and say, self-employed, home-based entrepreneur or investor. The reason that's important is there's over 250 different deductible expenses for self-employed, home-based entrepreneurs. Okay. A lot of you are probably taking the majority of these basic deductions. Anyways, expenses, bills, if you will, phone bill, internet bill, power bill, portions of your rent or your mortgage, for those of you that have the designated home office, right? Instagrams, marketing, the list goes on and on of what is a deductible expense. But if I was to give two pieces of advice from a tax standpoint, number one is have a system to track your expenses. Whether it's a designated business credit card, that everything business related goes on that card. Maybe it's an Excel spreadsheet, QuickBooks. Maybe you hire a bookkeeper. There's an awesome tax app that I'll talk a little bit more about. I have a link that I can share with everyone as well. Just so I don't forget, it is called Keeper Tax. And let me just even throw, I've got a link that I can share with everybody. It is awesome. So I have downloaded just about every tax software for you and look through them. Here's a link actually that is tied together with it. It's like $170 for the year, which also is tax deductible. The reason I love Keeper Tax is any of you that are like my mother are going to like this information and you're not going to do anything about it. So the reason that I love Keeper Tax is you can tie together your credit cards, you can tie together your bank accounts, and it'll text you and it'll say, Cari, I noticed that you just went to lunch. Was that business related? And all you do is reply yes or no, and it'll track it for you in the app, right? You jump in an Uber, you jump in a Lyft, and you're going to a mastermind, you're going to a training. Was that business related? Yes or no? And it tracks it within the app. Really, really cool stuff. And very easy to just go to one specific app that you have everything detailed out. Okay.
That's amazing. I mean, how many of us get to the end of the year and it's like, what you have to go through it and figure out what's expense, what's personal, or what? That is incredible. It's the best $170 that I would spend. When I tell my husband about this, he's going to be over the moon.
It really is so awesome. And what I love about it is the taxes is just based off of awareness. Like no one cares about your money more than you do, right? That's the rude reality. No one cares about it more than you do. So when you go into the app and you see what categories are and are not deductible, it may end up helping you make better decisions from a tax standpoint as well. And then as you continue to compound that wealth, if you change the S Corp election and save $7,000 on last year's taxes, the following year it could be $20,000, $40,000. That compound effect really adds up. And then the more that you understand this, the easier it is for you to help relay that to your clients, right? Because I grew up with my mom that was an agent, my dad that was a broker. My mom was like the best person to work with ever, and my dad was the business person. So I got to see this interesting concept of both sides, where I started investing into real estate at 22 years old. And just in the last month, I've bought over 75 units because of the tax benefits that it helps me with, right? So there's a lot of cool things that outside of being an agent, it will help you as an investor, and it will help you with your clients find additional tax benefits that potentially close more deals. Okay. Those of you that travel, those of you that go to masterminds, the list goes on and on. The cost of your accounting services, the cost of your entity setup, all of those become deductible expenses. What else am I missing? Any other deductions that you can, I've got, everyone always asks this. So I'll let you think about additional deductions you want to add, but I'm going to talk about the vehicle deduction real quick. It is a very common question that I get asked, especially with agents. There's a couple ways to write off your vehicle. You can itemize everything out, oil changes, gas, you name it. More difficult. I don't love that way. The second way is tracking your mileage. Mile IQ is an awesome app that you can track your mileage with. Because gas prices were up last year, they've increased the mileage deduction. It was 58.5 cents a mile. For the second half of last year, it went to 62.5 cents a mile, and they just took it over 65 cents a mile. The third way to write off a vehicle is my personal favorite. I've actually made money on my last 3 vehicles because of this tax code. Section 179 of the tax code allows you to write off the vehicle if it's over 6,000 pounds and it is for business. When you go to YouTube University, you'll see like the the G-Wagons, the Range Rovers, right? The Teslas. But it can be trucks, SUVs, a lot of electric vehicles, allows you to take a larger depreciation on that overall vehicle. So all of you need your vehicles for your business. It's an excellent deduction to take advantage of. So Cari, Becky, any other deductions you can think of, that business cards, anything else that you can think of?
I mean, not right now. It looks like it's a pretty inclusive list. I don't know if anyone else out there is thinking of something else that they can pop on there.
Yeah, go ahead and chat it or just unmute yourself quick if you do.
Awesome. And know as well, we're going to give everyone the opportunity to speak with our team as well. And we'll break a lot more of these deductions down based off of your situation when we speak with you, but a lot of benefit within the tax code. As you continue to build and grow your business.
Hey, Tommy.
Go ahead.
I'm sorry. One question was a golf club membership.
Great question. So it really depends on your income. Mine is because I bring people that I go with me, right? I'm taking them for meals. I'm taking them for experience, and I'm taking them for business. They are getting rid of entertainment as a deduction, but there are a lot of deals that are closed on the tennis court and the golf course. So there are ways to make them business related, just like there are with business meals, but you have to have the income to be able to justify it. And as long as you have an alibi and are tracking those expenses, usually if there's a will, there's a way.
Okay.
I should go back to my legal disclaimer to answer that question, but there is a way that is the case, yes.
We also had someone who asked, is open house signs and yard signs deductible? Would that fall under marketing?
Yeah, great question. 100%. If you're wondering, and this is just a statement to write down for your, right? If there's anything you take away, take this away, please. If you're wondering if this is a deductible expense, ask yourself, is it ordinary or necessary for my business? Going to a business lunch or going to a country club is not necessary for my business, but it's ordinary. People do that and it's tied back with my business. Is it ordinary or necessary? If you can answer yes, then that can become a tax deductible expense. Okay. So open house signs, yard signs, I'd argue those are necessary. They're very, very easily ordinary. So absolutely, those are tax deductible expenses.
So we have another question on more deductions. So a lot of us in the real estate industry, we have subscriptions to multiple real estate news sites like Industry News, Inman, KCM, etc. Would that be deductible, as well as virtual assistants? And of course, you've already answered signage and business cards, but virtual assistants that we may be employing that we're just paying like a flat fee to a company for, or paying them directly. So new subscriptions, industry news subscriptions, and virtual assistants.
100%, all of those are deductible expenses.
Okay, great.
I brag about my mom and my dad. My wife is actually an agent as well. Just barely got her license. I'm super proud of her as well. Getting her vehicle is tax deductible, right? There's a lot of things that I've separated out for my wife to make sure to utilize. I don't pay for my insurance. My company does. And then I reimburse my wife for all of the medical expenses. Another thing for those of you that are 1099 that have health insurance, health savings accounts. If you don't have a health savings account and your insurance qualifies, if you're single, it's about $3,700 a year. If you're married, it's about $7,700. I think they just barely upped the amount, but it's one of the only expenses that you deduct 3 times. Last year, I put $7,500 in, and I get the deduction. Take $7,500 out and I get the deduction. Use it for medical expenses, co-pays, prescriptions, and it's deductible again. So insurance is a big area where a lot of people hold on to W-2 income longer than they want because of insurance. But if you utilize the tax side of it, it's a huge benefit insurance wise as well.
So those of you that are at eXp Realty and have the health care here, most of those plans are and can be attached to an HSA, just so you know, that's what we did. So we not only saved $600 a month as a family, but we also were able to now take the tax savings. So we're saving more than that. If you think about it, tremendously more than that, if you think about it. And our deductible is lower than it was when we were paying, you know, $1,600 a month as entrepreneurs on the open market. So definitely look into that. If you have not, go into the eXp Healthcare Workplace group and schedule your free call for a free quote and ask specifically about the plans with the HSA if this is important to you. When you said earlier, Tommy, you know, go in there and change your exemption, and if you make $100,000, that's 7%, that's $7,000. The first thing I thought of is, and then if you could put that $7,000 in an HSA too, like you're saving money. I mean, you know what I mean? It's just like, holy cow, there's so many different ways that we can save money that if we don't know this, we're literally giving thousands of dollars of our income away. So love it.
The compound effect is so amazing when it comes, and it's even just with just recently, so much of the conversation is talk about interest rates. I feel like I hear it nonstop on the tax side of it. And it's like, we're talking about a couple percent, couple points, but we could care less about 10, 20, 30% when it comes to tax savings at the end of the year. Now, it's relative. I understand that there's a lot of changes that go into that decision, but the more that you can speak on some of these things, I think that it also obviously really helps. Another thing for those of you that have little ones, those of you that have kids, those of you that have grandkids, are they helping you with signs? Are they packing envelopes with you? Are they doing different things that you can justify work where you are paying them? My daughter makes $12,949 a year, which is just below the exemption where she doesn't have to file. I get to write it off. She's a model, naturally. We all think our kids are, right? She helps with the advertising. She helps with the different things. You have to justify actual work. But if I put that money into an IRA for her, the compound will be $1 million by the time she's 25. Now, whether she wants to use it for college, a down payment on a home, starting a business, that's up to her. She should, you know, that's hopefully she's making good choices. But setting future generations up while benefiting from a tax standpoint, my point earlier, I really love the compound effect of what these things do. Protect yourself. Personal is personal, business is business. Once again, if I bring the attorney on, they would have spent 45 minutes on this slide. I'm not going to do that to you. I'm just going to say that we can all agree it is a very sue-happy world that we're living in, right? 40 million lawsuits filed every year, 76 a minute is the average. And real estate has created more millionaires than any other industry in the US. It shouldn't come as a big surprise that a lot of them are real estate related. Breach of contract, slip and fall, premises liability. As an agent or as a broker, this isn't the forefront of your mind of what the concern should be. But those of you that plan on being investors and having multiple streams of income, separating those streams of income, giving yourself a true profit and loss, and focusing on the long-term benefit of being a business owner is naturally going to be a huge value, huge benefit. Diana, there is an age limit depending on the income. So oftentimes, Diana's got a really good point. For kids, is there an age limit on being a model for marketing or advertising? The short answer is yes. The longer answer is no. And let me tell you why. Once again, if there's a will, there's a way. There's always a solution to problems like these. So you have to follow workforce guidelines. I obviously can't put if I had a 7-year-old on heavy equipment, right? A lot of them are no-brainer type things that you hear. A lot of accountants and CPAs shy away from anything under the age limit because of what people make and income levels. If you make $5,000, $10,000, you can't write off your kids, right? But the more money that you make and the more advertising that you're doing, oftentimes it does make a big difference for how you're utilizing and leveraging the dynamic of your family and what those things are in the advertising or marketing world for. So if there is a will, there is a way. I've learned that by trying to get accountants and CPAs to learn how to talk for the last 10 years of my life. So there is a way. All right, your structure is a living, breathing organism. Long-term, once again, is really the goal of what we look at from prime corporate side. Those of you that own real estate, those of you that are selling real estate on a daily basis, trust, wills, living wills, power of attorneys. You probably all have clients that are purchasing in trusts or purchasing in entities of their own. And I think that understanding it is a huge value and a huge benefit that other agents oftentimes are unaware of. Up top, you have a full estate plan, trust, will, living will, power of attorney. Protect your assets long-term. And then once again, as you're an agent or a broker, if you get into coaching or education, as you get into investing yourself, as you have multiple streams of income, start to separate out those liabilities between the personal and the business to give yourself a true profit and loss, and then separate out your liabilities. Okay. On either side here, you can see that I have active versus passive. When you sell a home, it is active or ordinary income. If someone is wholesaling or fix and flipping a property, it is active or ordinary income. If you're selling a home to an investor that's going to use it as a long-term buy and hold, it's passive income. And you can see at the bottom, they're taxed two different ways. So active or ordinary income is taxed at the highest rate. It's 10 to 37%. That's where I want to take my deductions. That's where I want to write off my phone, my internet, my power, my vehicle. But passive investments are taxed 0 to 20%, which is not only a lot lower, but the income levels really vary. So how can you impact your percentage the right way? And how can you keep more percent in your pocket to reinvest back into your business, put it into your own retirement, or throw it off a bridge? I don't care what you do with it, but give yourself the opportunity to make that decision is ultimately what we want to help you understand how to do. So I want to leave some time for questions, so I'll just cruise through this last one real quick. Personal credit versus business credit. Everyone that's here has a legal name, a social security number, and a personal FICO credit score, right? Ranges from 300 to 850. If anyone knows the credit score cycle, it's this group, right? Talk to a lot of investors that aren't as aware of credit as this group probably is. Business credit, you can do the same thing. So give yourself a business name. Make sure you have the EIN or the employer identification number. And then build and develop a paydex score or a credit profile for your business. This isn't necessarily the most advantageous things for realtors or brokers unless you're really scaling and growing your marketing. But I would argue that any successful entrepreneur would say, structure your business so that it's not if you get sued, but when you get sued, to protect yourself. And the more funding options that you have on both the personal side and the business side, the more opportunities that will continue to present themselves, right? I would rather use business credit, keep myself organized from a tax standpoint, let the business pay for itself, and then pay myself from there. So now you're separating the two legally and financially between your personal and your business. Okay. Cari and I have been going back and forth for the last little bit. And what I want to offer to everyone, and I think the goal of Prime Corporate and how we've built and grow this business over the last 10 years is if we can bring value to you as a business owner, naturally, I think that we just have services that you're going to need or going to want. So this is a free consultation for everybody. It's 45 minutes to an hour to go over your situation. If you're already structured, great. If you need structured, we can help. But everyone should be structured as a business. We do entity structures, LLCs, corporations, anything along those lines. We help clients build and develop business credit and corporate funding. We're getting over $4 million a month in business credit for our clients right now. We have a full team of accountants and CPAs to file your taxes. So for those of you that don't have a good accountant or a good CPA, or those of you that are generating enough income to justify having a bookkeeper, those are all things that we can help with. And last but not least, estate planning, trust, wills, living wills, power of attorneys. But we want to help you by actually helping you. So hopefully this free consultation is a good way to bring value to your life, bring value to your business, and hopefully earn your business over time.
Well, I can tell you that I've learned a tremendous amount from being on this call. Most notably, I love the one about, you were talking about your daughter and have her, she'll be a millionaire by the time she's 25 with how you're setting that up. And I immediately go and I think about my grandchildren. You know, my grandchild is almost a year old, and then I've got one turning 3 at the end of this month. And I'm just like, wow, what a difference in generational wealth that could make for them. And, you know, passing. So not only for you guys, but also, are your children entrepreneurs? Should they be watching this video? You know, as soon as Cari posts it on YouTube, I'm going to be sharing it with our daughter. Her and her husband own a construction company, a new construction company for the last year. I mean, there's just so much in this that can help you save and keep your own money. So, I have Georgia. Georgia, can you elaborate on your question? Is speaker an attorney? Oh, you're talking about Tommy. Is Tommy an attorney? Tommy, you're not an attorney, right?
Don't make me go back to that legal disclaimer, Georgia. I already bored everyone enough. I
think Georgia came in late, so she didn't see your disclosure, Tommy.
Yeah,
Georgia, there was a disclaimer.
more power to her. Good for her. That's how. No, I'm not a CPA or an attorney. I've got a full team of them that are on staff, but I myself am not.
Okay, well, great. Now, Carolina has 2 questions. Thank you, Carolina. And I don't know if it's Carolina or Carolina, so I hope I'm not mispronouncing.
It's Carolina, but thank you for questioning it. It's Carolina.
Carolina?
Yes, it's Carolina.
You know, I'm from South Carolina, so I immediately went to Carolina. You know,
that's totally fine. Everyone does it. And I say, sorry for this, but I say, I'm not from North Carolina if I were a state, but I would be North Carolina if I were a state, but I'm not. So it's fine.
Awesome. I love it. Do you want to ask your questions, or do you want me to read them?
Yeah, sure. Sorry, I just have my baby with me. Question number 1, Tommy, is it too late to set up an LLC for 2022? Like, I've been working with my accountant to do that, but the honest truth, I don't know if she's actually done it.
So we can help you with it if you need it, but make sure your accountant knows that you had the intent in 2022 to generate income. So you can't set up the LLC as if it was set up in 2022, but you can still set it up and show that your intention was previously to be generating income in 2022 to make sure you're maximizing on as many benefits as you possibly can.
And Carolina's second question, because I know she's working with her baby there, is as investors, should each rental/flip property have its own LLC?
Ooh, this is good. This is the $1 million question. If you ask 100 attorneys, you're going to get 100 different variations of the answer. Trust me, I've done it. So there's a couple things to be aware of with this. It depends on 3 primary areas. Number 1, how much equity do you have in the property? Number 2, what is your overall portfolio? Number 3, what is your risk tolerance? I have some clients that will put hundreds of properties in one LLC. I have some clients that will do a different LLC for every single property. Every state is different. The liability is different. It really is going to vary off of those 3 variables. But what I usually recommend to simplify the answer, Carolina, is don't have more property or more equity than your umbrella insurance offers. If you have $2 million of real estate, and you have $1 million insurance policy, probably not a great idea, but you can combo the insurance with the asset protection. And at the end of the day, there's no one right way that you're totally going to protect yourself. You can make it more difficult for people to sue you. And there's a lot of strategies you can do to own everything and look as broke as possible on paper. But at the end of the day, the insurance and the asset protection has to align with ultimately what your long-term goal is.
Awesome. Thank you so much, Tommy. And again, Carolina, I would suggest that free consultation. If you can take a snap, that would be awesome. And you can definitely probably dig in more in that. Helen and Lloyd, we'd love for you to take yourself off of mute because you have your hand raised and ask your structure question.
Hey, Tommy, I have a structure question for you. My husband and I are here in the state of New Jersey, and with our company EXP, we are a domestic partnership. So the domestic partnership, the team leader, my husband, is the one that gets the 1099. So right now I'm selling houses, but not showing any income in the state of New Jersey. So that's a struggle that I have. So how do I generate or show income from myself, you know, from a protection perspective? And then question number 2 is, the state of New Jersey's real estate commission requires that you get paid from your company as an individual agent. So my husband has to receive that 1099 in his personal name. So how do we take the personal 1099 income and dump that into an LLC to flow through the LLC?
Super solid questions. It's always New Jersey and these domestic partners.
I know, I fucking hate them.
I'm telling you, every time I run into this, it's New Jersey. So
Should I just move? Is that the answer? Is that just that the answer? Go to the place with the palm tree?
I can help you buy something here in Naples, Helen. I'm just saying.
I have a house in Vero Beach, but I have kids in school. I can't leave yet. I'm trying. I know where the land of freedom is, Brett, Becky. I'm trying to get there, baby. I'm trying.
I can't tell you 100% off the top of my head. I've dealt with this before. There's a certain year, like how many years have you been together?
We've been married for 21 years, and we've had an established LLC for 20.
Okay. There's a year restraint where it starts to work for you. I can't remember off the top. Every state is different. I can't remember off the top of my head. There are ways you could do this. The other thing is, out of New Jersey, there are some states that will offer a PLLC, a professional limited liability corporation. California has really clung on to this as of recently, and you can set it up under Helen and Lloyd PLLC. You're still getting paid into your business, but you're getting paid as an entity and as a business itself. So they will probably require your name to be on there. They will probably require your license number to be on there, but it is an option to have a PLLC as opposed to an LLC. Some states are going to require it. I think it's going to become more common for other states, unfortunately, but there are ways that you can still do that and have your name and then PLLC.
Perfect. Thank you. I appreciate that.
Domestic question, I can't remember off the top of my head, and I don't want to misspeak. So we can, our CPAs will be able to speak to it better. I'm not 100% off the top of my head.
Is that something that could be touched on and covered during the free consultation, Tommy?
100%. Yeah. Feel free to just ask them that and they'll break that down.
Excellent. Thank you. Thank you.
Wonderful.
Thank you.
Great question, Helen. All right. Who else has got a question?
I hate when I get stumped, but here we are. I'm not going to just, I've made up enough things to this point.
Hey, it's the Jersey girl in me. I'm sorry.
Yeah, definitely. It's better to say, I don't know, right? Than to wing it. So anybody else, any other questions? Cari, any last thoughts before we close?
No, but I was just looking to see if anybody online had asked. So let me just give it a second. We've had a ton of people watching live. I just don't think, let me see if anybody asked a question. Nope, no questions online, but thanks again for you guys for watching. You know, you can always ask questions on the live as well. Now, what I do want to make sure is, Tommy, did we put everything in the chat, all your information, how they can set up the free call? Because I'm going to go and post that in our live chat as well.
You know what? I don't think that I did, but let me do that for you real quick.
That'd be perfect. And any last questions anybody has, unmute yourself. Don't be shy if you do.
So
I'm looking through to see if I
Yeah.
missed anything.
I don't see anybody. So while you guys are looking and while Tommy's putting that information in the chat, just wanted to say, take advantage, please, of that free consultation, primarily because, we just don't know, and lights are going off in my head now of how much money we leave on the table, right? We talk about that all the time, is how much money are we leaving on the table in a real estate deal, but how much money are we leaving on the table in our own business? And $7,000, $8,000, $10,000, that's a lot of money that's yours, that you can use it for other things, to invest and reinvest and use that money to make more money. So Tommy, we just really appreciate you pouring into our group, and you're so busy, and just with so much gratitude, we come to you for giving us such amazing information. And we are so excited to have you on quarterly. I didn't know that. So Cari, that's awesome. I love it. I don't know about you guys, but I'm showing up for that. And we just really do appreciate you so much.
Of course. Yeah. Thank you. And please let me know what you want to know more about as well. I'm happy to bring my CPAs on here, my attorneys on here. I'm happy to open it up for Q&A, and we'll probably do one on cost segregation studies. I think would be awesome to really break down, go into the weeds. My partner and I just did cost segs on a couple properties, and it saved us over $600,000 on taxes in 2022. It's massive, awesome tax benefits that you can benefit from as an investor, and you can help your clients benefit from, maybe push them over the edge to buy those properties. So the more that I can provide value and help, I'm here for it. So thank you everyone for having me.
Yeah, and guys, please go to Cari's YouTube page and share this with someone that you love, that is an entrepreneur that owns a business. If you care about them and their ability to be able to hang on to as much of their own money as they can, please share this video for them to watch it. And then Tommy, if they wanted to do a free consultation after watching this, could they do that as well? Because it's going to be on the video.
Yeah, just make sure to click on that link, because we are going to do discounted entity structures for everybody as well.
Okay.
Usually you can pay $1,000 to $2,000 if you hire an attorney, and we're going to do all the entity structures for $300 to $600. Every state's a little bit different, but $300 to $600. So super discounted entity structure rates on top of the free consultation. But that's
awesome. So guys, make sure you copy this link. It's that Tommy put in the chat box. It's the primecorporateservices.com/the growth collaborative. Cari, thank you so much for digging in and getting this for us so that we can all benefit from it. We appreciate you.
Yeah, I cannot wait to dig into trust, business trust versus wills. There's a lot of things we're going to bring to you guys. Tommy's going to bring an expert. It's going to be quarterly, but he's going to bring some of these nuggets to you guys on the Monday Revenue Share Huddle once a month too. So, as you're engaged, you're going to learn more. And I think this is stuff that we just don't talk enough about in business, particularly in this industry, that's going to bring value to all of you. And to your clients. So thank you, Becky, for leading the call. Tommy, I'm super excited to have had you. I will grab all the information, the links. We'll make sure that we post it. And anybody that needs anything, you know where to reach us in Workplace, or just go ahead and find us on social or email.
Bye.
Thank you.
Bye-bye.